Hi guys, and no, you're not watching a movie. It's not Airplane, the sequel, the market sequel. This is Neil Pryor here, MVP, as I'm known in trading circles. Just giving you a quick update as to what happened in the Forex markets last week, the weekend in Friday. I think it was the 20th of March. It does feel a bit like a roller coaster movie, doesn't it? Airplane certainly summed up some of the panic that's in the market the last few weeks now. But we're here to try and give a little bit more of an insight as to what happened last week and where you should and shouldn't have been trading the Forex markets. We're here at my homepage, Fxcorrelator.com. I'm a trader. I'm a full-time trader at the moment, scalper. And I don't train people. I do some mentoring at times, and I have trained in the past. But to be honest with you, what I do these days generally is just pretty much full-time professional trading and scalping. I'm an independent trader. I trade my own accounts. I don't need to make money training people, and I certainly don't go out there like, shall we say, a lot of people out there doing now, where they pretend they have traded and then they try and sell you training courses. That's not what I do. I offer observations in the market, places like Forex Factory, Trade to Win, even places like LinkedIn and Facebook at times, Twitter, just giving people an insight and trying to give people that little bit of an edge and help to make money, because it can be done in trading, but it is very, very hard. Never think that it's easy. It's very hard. It's like any profession. I've been doing this 20 years now in the Forex market, and I've been gambling and trading for a lot longer than that, I can tell you. And it does take time. However, the markets have been very, very kind in terms of what is going on. So let's take a look and see what happened last week. Okay, first of all, I just wanted to have a very, very quick look at what happened, say, for example, on the FTSE there on the left, and also the US index there, the big Dow. And just to see what was happening last week. And last week was a very, very choppy week. I mean, the week earlier, there was a lot more going on. Let's just pull this across for a second. This is the day. You can see that there was heavy falls the week previously. Came into the new week. Just going to line that up, hit the 16th. And yes, it kind of has fallen. Tried to rally a bit, fallen again. So generally, the US market coming off quite a bit. And there's some big volatility in there, as people know. In terms of the UK index, again, let's run it back to the previous week. Again, the previous week reflected most equities markets. Bad week last week. This week we came in, let's go into the 16th there, coming in just there. There we go. And not quite as bad on the FTSE as the US markets, but equally pretty damn volatile. Some massive swings during the week. And we also saw a lot of volatility in the Forex markets as a result of that. I'm not saying one impacts on the other, but clearly they do in certain correlation patterns and strategies. But yes, I mean, all of the markets were pretty volatile. I am not a specialist in the equities market, stocks, trades. I used to look at this back in the 1980s, 1990s, and I was also assisting on commodities trading on oil floors back in the 80s. But really my focus is Forex. And I advocate and I try and encourage everyone to specialise in what they do. Don't try and be a generalist in trading. Find a niche, an area, and really focus on it. Spend years and years and years on it, and it'll pay dividends in the end. I always advocate that. But I'm just trying to give you some background here as to what happened last week in the equities markets. But it was, all in all, very, very volatile. And that came through, obviously, on the Forex market. So let's take a look at the Forex markets for last week. Okay, on the left-hand side, you've got two indicators up there. I'm going to talk about those in a second. On the right, I've taken a sample of a couple of currency pairs I was very, very interested and active on this week. We're going to talk about cable there, the GBP USD, top right. And we're also going to talk about the CAD pair with the US dollar, which was quite interesting this week as well. Very, very profitable for me at times. But let's start on the left there and just open these up a little bit, okay? The top chart here shows 8 currencies, different colours. You can see the colours here. And this is zeroising right from the start of the week. See that? Goes flat, bring it back. That's just about coming in late Sunday night last week into the 16th session, 16th of March. And it gives you an idea of where the individual currencies actually went in terms of pippage. Okay, so this is not the pairs. This is the individual currencies and what kind of pips they delivered, and equally what directions and bias they were. Okay, we're going to talk about that first. Underneath is my Fxcorrelator indicator. which takes this information and actually bends it off of a moving average. So it gives you more of a moving average directional bias. So it does look completely different to this, okay? But let's just take a look at the top one first here. We're going to drag it down a little. So what happened this week? Well, I mean, look at some of those crazy pippages. If you do follow the Forex market, to see this kind of level of volatility in 1 week in terms of directional bias and actual absolute value of pippage moved from zero, that's pretty hefty stuff. We're talking Brexit action territory and any other economic crash there has been. So it's been pretty full on, and that's been for about the last 2 or 3 weeks now. Looking there, you can see that the yellow yen had a great first 3 days, Monday, Tuesday, Wednesday. Equally, the other really big mover was the greenback, the USD. Look at that. First 4 days, look at this, topped pretty much coming into the Friday session, topped out, and that was up in the 500 plus pips. So USD, the USD index on its own, actually moved some 500 pips first 4 days. Therefore, if you can trade that against the currency that is bearish, and we're going to talk about that in a second, generally, if you were trading higher time frames, 1 hour upwards, something like that, which I don't actually do, I'm more of a scalper, 1 minute and below. If you were looking constantly to be buying the US dollar in those pairs, you were going to do pretty well, okay, pretty well. So the story here was the first 3-4 days of the week. The two big players you needed to be in was yen and US dollar. The yellow yen, the green US dollar. That was where the action was, guys. And if you follow me and some of my scalping comments and action, I was talking about buying USD all the way through the week, pretty much. And with you can see why. You can see why. It was pretty obvious. In terms of what was going on in terms of, let's look at the bear side of the market, the sellers. They were coming down. Some of these guys were coming down into the 500 pip area, as you can see. And again, for me, there were two main players, both predominantly very aggressive through the first 3 days of the week. So here's Monday, Tuesday, Wednesday. And it's these two guys here. It's the red sterling, GBP. No surprises there. Sterling been having a very bad time last few weeks. And Canadian dollar, which didn't surprise me. Canadian dollar has been showing quite an aversion to the greenback in more recent days. So again, to see that nice negative correlation there, the CAD bouncing off against yen and US dollar, very nice pairs to be trading, guys. Back end of the week, last 2 days, you can actually see these guys bounce back. They rallied. So it would have been harder to make money selling both of those Thursday, Friday. And Friday indeed was quite a choppy day. There was a lot of consolidation. You can see there, nothing really extended beyond where it had got to by Thursday. And that sometimes on a Friday can be an excellent opportunity. If you've seen significant movement in the week of any particular currency, index as it were, just keep a very good eye out on the Friday, because it's entirely possible that traders will be capitulating positions. They'll be closing out. They'll be tidying up, and they will be just becoming very safe. And if not, just coming out of the market for the weekend. Not all traders, you know, even some of the traders trading high time frames, they don't necessarily go through the weekends, because you need to widen stops, you need to have broad shoulders for that kind of stuff. And I certainly don't do that. I trade off very small time frames, and I'm in and out of positions in seconds, even minutes maximum. So I certainly don't entertain holding stuff over the weekend. And as you can see here, we're not sure what's going to happen next week, who knows. But yeah, you can see there was quite a lot of consolidation here on Friday. I'm just going to quickly drag out the Fxcorrelator on a 20 moving average setting. Just again, what this does, and again, this is available for free on all my website and my forums. Just contact me and I can give you this guy for free. What it does is it shows the movement of any particular currency against a 20 moving average. So I'll give you an example here. You see the greenback, the green US dollar, very bullish on Tuesday. And on this chart, it's bullish because it's above the zero. And what does that mean? Well, it means that in just about every term you can think of, the US dollar was probably moving upwards in a good trend. And if you look up here, you can see that it was. And it was the most aggressive of all of these, because clearly it was above the rest in terms of a pattern against the 20 moving average. Okay, same down here. See here, This is telling us on this moving average that the red sterling was very, very, very bearish, very aggressively bearish. And up here you can see it was the same. You can also see the CAD there coming down, but the CAD came back quite rapidly, again reflecting what was going on in real time. And I'm just showing this to give you an idea of how you can use these things. You can use both of these indicators quite effectively. This indicator isn't available at the moment. Contractually, I can't release that at the moment for free, but I will do hopefully at some point. But again, if you go online, hack around the MetaTrader 4 sites, this is all MetaTrader 4, you'll probably find some kind of fixed indicator there somewhere. And my Fxcorrelator down here is not unique. There's hundreds of strength meters out there, but I've been publishing this since 2009. And I built my own one in about 2001. So I can assure you it's been around the block and it is very road tested. So that was what was going on in the week. And just to finalise this commentary, I just wanted to show you what that means in terms of actual pairs. So let's just highlight a couple of these pairs and show what it means on the chart. So I'm just going to highlight a couple of things here. So let's look at the cable chart, which is sterling against US dollar. Let's pull it down and let's see what really happens. So on the left hand side is our fixed start index, where the guys all start from 0 over here. Let me just pull that out a little bit. That's it. And on the right here is the cable for the week, starting around the 2400 level. Oh, sorry, 1.24 level up there. And boy, oh boy, oh boy, look at that. It was down at the 1.14s. That's 1,000 pips. 1,000 pips, guys. There was a 1,000 pip fall from early trading Monday all the way through to, well, it kind of had a little bit of a range, a little bit of a kickback, and then it did get down to the very early hours of Friday morning. It hit something like 1,000 pips. So this was around this time here. On this particular chart, sterling didn't come all the way, but it was that last push there was actually, can you see this, more driven by the fact that US dollar kicked up right at the end. You can see here sterling really hit a strong resistance line, which I'm kind of pointing out now. So you can see how sterling, this was a massive resistance area, and eventually it was a good idea to actually play off that resistance and start buying sterling back in. But can you see just how US dollar just got that final extra kick off this high on the Thursday, just nudged in there, and that's what got the 1,000 down here. Just took into the 1,000 there. 1,000 pips. Now, I can assure you, and again, if you've been following me, daily scalping updates I've been providing on most of my websites, forums, LinkedIn, etc. You'll know that I did pretty well this week. I don't share absolute figures with people. I don't think I need to, because I think what I'm commenting on is obvious for itself. But there's been some great trading days, and I've tried to trade as much as I can this week because it has been so exceptional. And yeah, it's been a very good week for me. Because I'm scalping, I'm not obviously holding and riding positions, and I'm certainly not trading these kind of levels, although I could do, but it's much more beneficial to me to trade very short time frames, very short scalping, because I can be in and out of trades and I can actually make quite a lot of money very quickly. I can really flip my capital. I don't need to put a lot of capital into the market. I can flip, I can be intensive with it, I can leverage it, and that's what I tend to do. But you can see incredible week there for that particular pair. Okay, very quickly, the other currency that really was of interest to me this week that was a real mover was CAD, the brown CAD. See CAD down there? Didn't quite reach the depths that sterling did this week, but it did a damn good job. And it bounced very, very aggressively. It bounced earlier than sterling, actually. It was an interesting one if you were trying to play bounces off these resistance lines. CAD was certainly one to look at, certainly into the US session on Thursday. And I'm playing it against the dollar here. And as you can see, again, we look down here, phenomenal action. You know, starting off here, early 16th, coming through the Sunday night into the 16th, Monday morning, earlier this week. And we're coming off at about the 137.40s, 137.50s. And it did on Thursday this week. Coming into early London Thursday, it did hit 46.50s, so that's in the 900s, isn't it? And you can see down here where that final push was. The final push was actually here, in this kind of area here. Looks like it was around about this area. So US dollar actually got a little bit higher, But as you can see down here, CAD was starting to struggle. So the final kick that the US dollar achieved here, the final kick up, you can see down here that CAD was already very, very much into a consolidation phase, which is why you didn't get this area. This area here hasn't got the pippage. It hasn't got a high position here. It's already falling. Yeah, you missed it. Whereas sterling obviously held on a little bit longer. But still a phenomenal week on CAD. And again, I have been buying UCAD at times this week, and it's been quite a good earner for me this week. Just wanted to quickly close out with an update of what's happened so far this year, starting around the zero at the front end of the year though. So 1st of January coming in around zero. At this end, I've zeroized all the currencies. And as you can see, I mean, it wasn't too bad, the volatility that was going through the first 2 months of the year. And then, as you can see, as in the airplane video earlier on, all hell got let loose. Absolute Armageddon, guys, in the market. Lots of changes and adjustments. And you can see from the 1st of January where the main action has been. I mean, it's been CAD and sterling that have really taken the pain. And they've taken that pretty much through March. March has been very, very destructive for those two guys. You know, losing a lot of pippage. And winners at this side, well, I mean, in times of panic, carry trades, whatever you want to call it, there are three currencies that usually spring to mind that people rush to. They go into the protection of those three currencies, and historically they tend to have been the Swissy, the Swiss franc, which is shown in grey here, the yen, classic on carry trades, and also the US dollar. And as you can see, those three are leading the pack. All of them are up there now from January, up around the 1,000 pip level. So if you'd invested in those currencies, pretty much any of them, against some of these others, those currencies themselves would have been worth 1,000 pips before you added in whatever benefits you got from selling the other one in the pair. So we're talking around 2,000 pips here, for example, on cable. If you'd started front end of the year, that's a serious amount of pips. I wish I had the hindsight. Euro hanging in there. There's a lot of reasons people are talking about why. I generally think the main reason it's there is ECB has been fairly firm on trying to hold its rates as long as possible. Not sure what's going on there, how brave they're going to be. Clearly other countries have reduced their interest rates to try and loosen things up. US dollar did, and look what it's done for it. Absolutely nothing, guys. The US dollar still booming away. So crazy year. Try and make sense of it. You can do. What I tend to do is follow the market. Personally, I follow the market. I trade where things are telling me to trade, and I just get on with it. I worry about the news and the commentary and all these kind of other hindsight, navel-gazing things after the event. I make money, and then I think about it. So, this is Neil Pryor, MVP, signing off. Go to my website. I've got some interesting stuff on here. I'll just show you this. I've got a free Forex training page, guys, by the way, as well. As again, I'm not here to sell people anything. I don't sell anything. I haven't run training courses for years because, frankly, I make a lot more money trading than I do training. And, yeah, I enjoy trading. That's what I do. So have a look on here. Go to this free page. And I do go through quite a lot of stuff. And then I give some examples of where to go. And it's all free. Some of the people I don't advertise, but some of the people I say it might be worth looking at. Of course, they're running training courses and things, but you don't have to do that. There's plenty of free stuff that they've got as well. And I'm not affiliated to them. I know, you know, I've exchanged and corresponded with them all, and they kind of know me, but it's not as if there's anything else. I just rate them. So have a look on there. There's plenty of stuff there, all free. Don't pay for anything. I never do. Well, I've paid thousands and thousands of pounds over the years for training. But generally, I think people give themselves a damn good education first 3-6 months in Forex without having to spend too much. Then when you've got the education, you've got a little bit of trading and demo trading under your belt, perhaps then think about training. But at least you'll be more educated and make sure you're not having people sell you stuff that really isn't worth the money. Okay, guys? So sermon over. Have a great rest of the weekend. I'm going to prepare myself for tomorrow where I'll be scalping again from early Monday. And all the best. Cheers, guys. Bye.